Good evening, everybody. I'm back here and with a very fantastic set of panelists on a very interesting topic, upsurge, which is what everyone wants in the financial sector. Financial sector is the fastest upsurging sector, right? But they want more. The customers want more, right? And of course, risk, which everyone wants less. Both the financial organizations and the customers and the regulators. It's only those pesky fraudsters who wanted to find holes and, make the situation convenient for them. But for us all, I think it's important to collaborate, to learn, and make the system healthy so that it serves the purpose for everyone. I'll request each of you to briefly, for 15 seconds, introduce yourself, in case there are people who do not know you. Maybe start from that side.
Nobody knows me, most likely. So my name is Gagan Singla. I am building a fintech in JM Financial called Blinkx, which is a digital broking startup. So we are kind of building a full fintech here. I am an engineer MBA with 20 years experience across 10 countries. Yeah.
Okay, thank you so much.
Hi, I'm Sudip Bandyopadhyay. I have been working in the industry for almost 35 years now. Started with Levers, ITC, Reliance, ran financial services business Testimony, and now I'm running a company called Inditrade Capital. We have microfinance, NBFC, and few other business verticals. We use extensively technology for reaching out to the Bharat part of India. Thank you.
Okay, that's great. Thank you.
Yeah. My name is Malcolm Athaide. I'm the CEO and co-founder of Agrim Housing Finance. I'm an ex-banker with 20 years experience, but primarily what we do is very different from the run-of-the-mill housing finance companies. We are a tech-first housing finance company which approves home loans to informal, middle class and lower middle class customers all over India at the click of a button, including a digital title search, a credit analysis, and approval which can be disbursed in a day or two. So that's what we are different. We've been growing around 3 times every year for the last 5 years. Yeah.
Good evening, everyone. I'm Sunita, Handa. I'm wearing 3 hats presently. I'm chairman of Toyota Financial Services India Limited. Then I am a principal advisor in a fast-growing fintech that is Protect.ai. And I'm also on the board of Zentrum Financial Services. Before all this, I was Chief General Manager and Global Head IT Channels and Operations for State Bank of India. Thank you.
So that's when we first met. And I met Sudip maybe a dozen years, 10, 12 years ago. Malcolm I met, no, have you met? We met sometime to meet in conferences. Met Mr. Singla also. Okay, so first question I want to understand is, so we have talked about digital highway and digital adoption and digital everything. But let's try to understand how much we have covered so far. So my first question to all the panelists is, in your opinion, how much of this potential digital journey have we covered? And the second part of the question is, how much further will we go, let's say, in the next 3 years, given the pace of things that are happening, the technologies, the regulations, the pull from the customers, given all those factors, how much further in the next 3 years can we go? Can we start with Sunita ji?
Thank you. So, question that what percentage of potential has to be tapped and what has been untapped? See, this will have a slightly longish answer because this depends a lot on what kind of approach you have to measure the tapped potential or the untapped potential. I give you a couple of examples here. See, RBI annual report says that more than 99% of retail transactions, they are through digital modes. they are non-cash transactions in retail. 99%, more than 99%, they are through digital mode. Now, I ask, why these are non-cash transactions? 99% or 99+%, that means paper-based transactions are less than 1%. But what about those billions of cash transactions which are taking place in, on ATMs or in branches or elsewhere, or even on POS terminals? So, so if we have to go ahead, or our mission is to go cashless or less cash society, then we have to introspect that why number of these cash transactions are not coming down. So where do you see potential? You can be happy that 99.7% or 99.8% of non-cash transactions, but why cash transactions? Why so many of them? This is one. Second example, what I see is we say that 75%, India has 75 crore internet users. Terrific, very good. But then when it comes to penetration, our level is 52.4%. So again, how much is untapped? 75 crores is a huge figure, but then only 52.4% penetration. In fact, I was going through a report last week. It has put India behind, in ranking, it has put India behind even Fiji. Fiji is a country with just, I think 1 million population or something. But because 88% of the people, the population has internet access, so they rank higher than India. India comes number 12 or something as per this very, very important report which has come out. So how do I measure potential, as you said, what potential to be tapped? Third, see, a very well-digitalized bank, the bank is very proud to say that more than 90% of our transactions are on digital modes. Okay, but you ask the same bank, how many of your customers, what percentage of your customers are using digital? It will be less than 50%. Transactions, more than 90%, but if you ask how many customers have migrated to digital, they'll be less than 50%. So what is common in all these examples is we need digital inclusion. Yes, many people are using digital and they are, they are enhancing it further, but then it is the digital inclusion which matters because it has to reach 55 or 52% of internet penetration is not sufficient. Then when we say our customers, why they are not using digital, why so many are not using digital, so that has to be enhanced. So the only good thing is, coming to the last part of your question, the only good thing is our government, our Reserve Bank of India, other regulators, and all the players in our ecosystem, they are really making all-out efforts towards this digital inclusion. And I'm sure you asked me about percentage. Last 3 years, whatever growth has happened in digital inclusion, next 3 years we'll see at least that much growth. That is what I can say. Thank you.
Yeah, thanks.
Yes, Malcolm.
Yeah, so I'll maybe just be a bit more, I'll take a different view from the business that we operate. We are into affordable housing, and if you look at the stats, there's the government stats from National Housing Bank, there's a demand for around 100 million homes, okay, which is not because of lack of money, but because of access to credit or availability of credit, which is lacking in the system because they are unable to assess these customers. If you look at 100 million homes, that means around 400 people or 400 million families. If you take this slightly at a different angle, half of them are urban, half of them are in rural areas. Only 5% of them can be serviced at any point of time. 95% of them land up in economically weak, low-income group because they don't have income that can be assessed in a manner that can be looked at. So this is one data point. The second data point, if you look at from the information about India itself, we have 461 million people who are employed in India, half of them in rural, half of them in urban. Within the urban, there are only 55 million salaried who are formal salaried, whom you can assess. And the balance around 16 million don't have, I mean, many of them are cash salaried. So you have a gap of 150 million in urban centers who are unable to be assessed even for normal credit. And that's not counting our 200 million of people who are there. So what these can be overcome, and we've done it quite well in the company that we are in, and there are many other companies who are replicating it. Number one, okay, and this is where the changes happen. The number one is on the income. There is various triangulation of income, even if you do not have a bureau. You have spends, you have various things that are there in terms of their patterns. There are various things in terms of their payment systems which are accessible to them. There are various activities which you can assess, which are very key to their activity. Even a plumber or a beauty parlor or a trader or a scrap iron dealer has an activity chart and a method to the madness. So this is one way. The second way is the way that behavioral aspects. Behavior is not only just social, it is also in terms of various access to the information that is available. We have not more than 440 million smartphones in India, so you will have behavior of that set. But that is increasing at a rapid pace every year. So if you are looking at it, we are right now at a moment that what BSNL, VSNL was maybe around 20 years back. The telecom revolution that happened maybe in 5 years flat. The financial services revolution is almost in the similar legacy. There's a huge opportunity. The tools are available. The method is there to the madness, and you can do it in a manner that is ability to assess risk. At the end of the day, we are only having a risk appetite. We are not avoiding risk. So it means that we are risk takers, and you would be able to price it for the type of customer segment, for the type of collateral, for the type of tenor, and for the type of profile that you have, as long as you understand the basics of the customer's income, behavior, spends, and the type of information that he's working with for his business. Thanks.
Okay, let's move a little faster. And so interesting that Malcolm said that it's not the not transactions, but beyond transactions, we can look at credit assessment. To what extent credit assessment has the kind of information that is available, that is required to enable inclusion. Yes, that's interesting. Thank you.
So, Manojji, I think I'll take a different view on the entire matter. I think your questions were twofold. First, digital inclusion, what's going to happen now is the scope. What is the scope? To my mind, we are just scratching the surface. In spite of the fact that India has done quite a bit, there is this stack, Aadhaar, Jan Dhan, and all that has happened. We have the UPI, which is very successful. But I think we are still scratching the surface. And I'll come back in a minute and explain why I'm saying that. The second thing you asked is that next 3 years, what's going to happen? I think we will see an exponential growth in this digital use of digital technology in delivery of financial services or accessing of financial services. And that will be maybe manyfold of what has happened in the last 3 years.
Okay.
Now, look at businesses like simple merchants. Imagine 5-7 years back, it was all cash, the small vendors.
Yes.
Now, it is to a great extent the UPI. The barcode we are scanning and we are paying them. It has happened, and it has happened in front of us. Now, we run a business, microfinance. Now, in microfinance, what has happened is because of Jan Dhan, all the loans go to the customers to their bank account. 10 years back, this used to be all cash because they used to deal in cash. There was a huge risk. Whenever you're disbursing loans in cash, there's a big risk of multiple facets of risk.
Okay.
But now everything is going to the bank. However, the repayment collection is happening all in cash. 95, 98% is happening still in cash. Now, this needs to be revolutionized. And once this happens, this is going to change. And why has that not happened? Because today the digital adoption has happened even in the remotest part of the country for the merchants. They are using UPI. Whereas in households which are taking loans, there the digital adoption is not that much.
Right.
You know, in our kind of, in India rather, the digital adoption for individuals is much higher level. Whereas if you go to Bharat, the digital adoption for individuals, households, is much, much lower. Now that needs to move to a different level altogether. There are few things which needs to be done.
Okay.
And things can happen very, very fast. Like this entire scanning QR code and paying came because of a necessity. Because at that point of time, it was essential that we do it. When the cash became rare, when COVID came.
Yeah.
See, these things kind of accelerated the pace. Maybe it would have happened in 10 years, but it happened very, very fast. So some triggers will have to be there. And with these triggers, whole lot of new things can happen. And that can revolutionize to a great extent. To Sunita ma'am's point, why we use cash? Because there are a lot of friction in the digital technology still. And that friction is not felt by you and me probably because we are a little more savvy compared to more people. But public in general, there is still a lot of friction. This friction needs to go out. It has to be easy to use. We are looking at, unfortunately, to a great extent from a corporate's point of view. What suits me when I have a digital technology?
Yeah.
We are looking at, of course, the regulator. But the regulator wants us to do A, B, C, D. Probably we need to have a huge focus on the customer. How we can make it easier for the customer to use the digital technology to facilitate the entire transition.
Very interesting, because one observer may say this is 99%, and that the second observer who's sitting in a village may ask, where is this 99%? I may not doing it even once a day or maybe once a week, maybe doing a digital transaction, stuff like that. So, you know, on a lighter side, it's like you said there's potential for exponential growth. I was just thinking, like a parent tells a child, you got 99% in exams this year, next year there's potential for exponential growth. That's the kind of, you know, scenario we have based on the way things are changing. Because that 99% is no longer good maybe after 3 years. We have to look at much more holistically. Gagan, what would you say is our progress and potential?
I think my view is again a different view. I come from a financial wealth kind of a firm. And what I see is that eventually money drives a lot of things in the business world. And if you see most of the money, if you demarcate the money by age, significant money is still with the people with 40 to 55 to 60 years of age will obviously have more money. Obviously the money divide is changing, but it takes time. Now, if you see people with 40 to 60 years of age, businesses have to target them. And they would have a significant number of percentage of people who don't want to do digital, particularly when it comes to money. So in my view, the adoption of digital has two areas. One is innovation, which is happening very, very well in India, particularly powered by the regulators, really, really well. Unbelievable India in terms of the way financial stack is moving. But bigger than that, I think 3 years, nothing will happen. The real change will happen when all of us die, in a way, or maybe become too old, when all the people who are with money are all the people who were born in digital age. So actually we will have a huge cusp of change and we will suddenly not realize that when all the people who were born after 95, all of them become the people who have money. So basically, let us say in 2035, the 40 years old are 95 born, the 50-year-olds are 85 born. And by 2045, everything will be digital because those people have only seen digital. So I think it is about us. I think I am also not as digital. We may say we are savvy, but we still feel a little risky because we have been born and brought up, and DNA and culture is much bigger than technology. So yeah, so the DNA and culture of all the people who are oldies, we call it old. मेरे office के लोग मुझे oldie बोलते हैं. So all the 40+ people will significant. So I think it's about age. So it's a generation issue. While obviously the second issue could have been innovation, which has been fully solved in India, and whatever is left will get solved. Now we have UPI without internet. It's unbelievable. UPI without internet, I was amazed to see how they have solved it, right? I was never ever I could never imagine, I'm a technology guy since 30 years, IIT computer science. I could never think कि UPI without internet भी कुछ सोचेगा. So they're really thinking Bharat. But the fact that age factor will remain. So everybody who has money has to be a digital person. So basically, when all the 95 people become 60, 20, 50, that it will be 110%.
Okay. So being digital native since birth is one factor that will make a difference in adoption. Sounds good. So now all four of you have given different perspectives. Now the question is, when it comes to collaboration, so let's explore collaboration among different stakeholders in the financial sector. How do you see collaboration happening between different kinds of financial organizations that will push this digital adoption, digital spread, digitalization across? How can collaboration make a difference as opposed to doing it individually? Do you see some potential to do that without being, because they say collaboration is a new competition. I don't know, this was heard in today's conference and I've read it also. Collaboration is a new competition. How do you see this whole digital ecosystem facilitating collaboration for driving it forward? Yes, Sudip?
I think it's a very important point you raise here. I think the way to go is collaboration, and I can talk about, see, India is a large country. If somebody is trying to do everything themselves, it's not going to work. There are already established systems, established companies working in different spheres. Now you can piggyback on somebody's infrastructure and run a very successful business. I'll just give you some example. Look at insurance companies. Okay. Now, insurance companies can try and do it all themselves or work with distributors, work with large other market players, and through them take their products and services forward, which is happening already, as we know. I mean, it's a well-established practice. Insurance companies don't have their own people selling insurance. They have agents, they have distributors, they have partners and all that. So that's a form of collaboration. Now, how do you do it in digital age? It's very easy, and they're doing it. Today, we see them doing it. Look at embedded insurance concept. When you're buying an airline ticket, you don't even realize it's frictionless. There is an insurance already bought. There's an insurance which cost is already included in the airline ticket. We may not be aware. There's an insurance cost.
Because it is digital, it is frictionless.
It is digital, it is frictionless.
Frictionless
Absolutely.
partnership.
If you go to buy an airline ticket and somebody asks you to fill up a form and give 20 details, you'll say, boss, I don't need the ticket. I'll go somewhere else. Now, because it has been made frictionless through the use of technology, we don't even understand that, but we are buying it. Anything which you can work with a partner and take it to the consumers in a frictionless manner, that's a win-win for everybody. The airline company is, I'm sure, making some commission there. The insurance company is selling millions of insurance policies, and customer is buying the insurance policy. God forbid something happens. He already has a policy there. So this is the example of that.
Superb
So,
example.
yes,
Superb.
absolutely, it can be done.
Yes,
It's
Gagan.
excellent. It covers almost all the points in my view.
Okay.
One thing I'll add is that with the regulation becoming serious, more and more serious, collaboration is the only way. Because earlier you could do a lot of cross-selling. Now you can't. You have to be in your area. And regulator is becoming very, very careful about that, right? So earlier there was a time when I probably would have been a time when airline was allowed to sell insurance. Today they cannot, right? So now collaboration is very critical because the main OEMs or the main owners of any products have to be focused there. And therefore collaboration is the only way. I see a lot of regulatory overbearing of making collaboration even more required.
Excellent.
So I'll just take a shot this. Two use cases, what we do, for example, we are tied up with channels who do maybe 3 of them, each of them does over 5,000 crores of financial services business a month. But they do affordable housing and maybe a small fraction of it, which is what we work with them. This is on getting business. We work with aggregators who have a few lakh customers on the SME platforms, and they cross-sell home loans. And they also cross-sell various other facilities like cards and other things. On the capital consumption side, and this is where the regulators help and various things, we do co-lending, and that's now become a lot of buzzword. We do co-lending with 5 institutions, and a lot of institutions use it. It is like a democratization of credit, which means that I will source, I will underwrite, and I will do it. I will get the capital in a sharing basis of 80% from someone and 20% from mine.
Yeah.
So that gives a lot of partnership benefit, that a person who can't have the distribution outreach but has the money can collaborate. There's someone who has the distribution but doesn't have the capital can source. Another who has the full platform can source also.
Right. Sunita, you want to add anything?
So taking what the panelists have said, the same point further, I'll give, I'll take collaboration and working together to a different level altogether. See, one is customer grievance handling. Their collaboration is required because there is a risk of, customer losing trust in digital. So how it comes is, in UPI, for example, a typical transaction can have 7 participants. It is the buyer, the seller, the buyer's banker, the seller's banker, then the PSP, then the TPA, and then they can be a reseller also. So a typical transaction can have 7 different, participants. And then if a customer has a failed transaction or something is not happening properly, so he or she won't know what is wrong. So then this collaboration and the way they work in tandem to solve who is the owner of this kind of a problem, okay, whose complaint is this, who's going to take the lead. So that comes very handy. NPCI has done magnificent work in this area, but much more needs to be done. Still, there are customer complaints. They don't know where to go because this is a work in process and it goes further. So this is one kind of collaboration. Second is when the fraud does take place. See, whenever you all would have heard about this, financial frauds through phishing and various other means, combination of fraud measures taking place. But ultimately, whenever a bank customer has been defrauded, the money goes somewhere. If an Axis Bank's customer has been defrauded, the remittance has gone to the fraudster in Punjab National Bank or somewhere. Now there has to be absolute good communication and collaboration between such banks that before that fraudster withdraws money from PNB, this guy has realized, the victim has realized that he has been defrauded. But by the time he tells, and this Axis Bank tells PNB, this money is gone. So here, this kind of collaboration where RBI has taken some initiative, there is CPFIR, there is Daksha, etc. But then it has to be taken to the real-time level. Right now, it is a reporting system, but till it becomes a real-time system, the customer will not get the advantage of, his money is safe there, it has been frozen there with the fraudster and he'll get it back. One very quickly, third type of collaboration, which is very close to my heart, I can't stop myself from mentioning it, is collaboration between various agencies. See, we have the cybercrime police, we have judiciary, we have, regulators, and so many agencies. Frauds are taking place, but see, it's very difficult to nab cyber culprits. But then, even when they are nabbed, what we see is after a few days, they are released on bail, for example. And then again, they go back and they again start with the vengeance and much more actively. So these kind of things, these people have to work together, that how much money is being spent on these anti-fraud measures and in cyber security, and then there is no deterrent for that. So then the policy making bodies, the government, they have to take this decision that no, this has to be probably made non-bailable, kind of crime, or something more, stringent punishment has to be there. So that these kind of things, when all agencies, they work together, then only this will happen. So that is the third kind of collaboration.
Very interesting.
Very much needed in our system. Otherwise, we can't stop cyber frauds. No.
Very true. In fact, in the earlier panel discussion on digital fraud suppression, Manish Jain from Experian pointed up about, raised the issue of liability account underwriting. How accounts that are opened are then misused by fraudsters and all that.
There is room for, yes.
A lot of scope for.
Yeah, yeah.
What you all pointing out that collaboration is essential and not optional. I think it's
Absolutely.
one of the 4 C's or whatever you call it. I want to close on a very kind of a theoretical question. So if you look at the history of money, you had money in the form of seashells, copper coins, gold, silver, paper, metal coins, fiat currency, digital currency. So the properties of money has changed. The way you use gold versus the way you use paper versus the way you use seashells or salt. Salt was also a currency at one point of time. The portability, the measurability, the acceptability, the durability,
And yeah.
all those,
Fungibility also, I
the
think.
stealability of that, how easy or difficult it was to steal or to fake it. All those were properties of money, right? I'm saying as we move ahead and we want to use money more and more, and we want to reduce the risk further and further, are you intrinsically expecting or seeing some transformation in the properties of money?
Definitely.
5, 10, 15 years, that will make an impact.
Yeah. Why 10, 15 years? It has to happen right now.
Okay, sure.
See, traditionally when we read about, properties of money, or what was it? It has to be fungible, fungibility has to be there. Then you also mentioned that recognizable, it should be recognizable, it should be fungible, it should be stable, it should be durable, those things. Now, now that CBDC is there and we have money like e-rupee, so we have to redefine money, and so many things which were earlier not thought of, we have to add. For example, security. I mean, earlier nobody thought it has to be, security has to be enhanced. When it is talking about money, security means anything can be stolen, so this also. No, now security has a different definition. Second is support for innovation has to be there. Who thought in traditional definition that innovation? So now, when it is the digital money, then of course, innovation support from the regulators, that is required. Third is regulatory oversight has to be there. I'm talking about those things which were not there when we read about money properties. So regulatory oversight is required. Without that, whatever digital initiatives we take, they will not happen. Then some transparency has to be there. So these are the properties which have to be added, and our students have to study now the properties of money in a different perspective when we have the CBDC, e-rupee, and digital money with us.
Thank you, Sunita ji. Malcolm?
Just on a different note, there would be a fungibility of money which would come from the type of tradability of the underlying asset. It means that today, like, we would have digital gold, which would be fungible into, I mean, you can buy 100 rupees of gold, you can buy 10,000 rupees, you can buy 10 lakh rupees, and it's all dematable. There would be a sort of a digital property which is similar to how you have abroad, where you have REITs and various other demat type of properties, which is broken down into subunits. There's also digital commodities, I mean, where you have warehouse receipts, which are underlying with the warehouse content which are there. All these things would be similar to the availability of money, and need not be that you may have a value to it, but maybe the rupee might be only the conduit of having a transaction, but there could be various transactions that could happen with various underlying securities. And hopefully once we have a capital account convertibility, we can also be able to trade in various other currencies. Thank you.
Okay, other kinds of assets getting converted to some kind of money. Okay, interesting.
So I think the thing which we need to address here to your question is the elephant in the room, which is Bitcoin. Now, we are talking about fiat currencies. We are talking about currencies which are regulated and, kind of controlled by governments. There is a whole spectrum of thinking which says that it should be free. The government should not be regulating this. It should be free from controls, and it should find its own balance. And they propagate Bitcoin, use of blockchain, and things like that. Now, I don't know whether that's the right thing to do, because what is the underlying? The way the currency evolved, there is some value to whatever you are dealing in. The gold standard was there. Then the paper currency came. The paper currency came. The gold standard was there, paper currency came. But question is, Bitcoin probably doesn't have an underlying.
Correct.
And that is a question mark. But the fact remains that if you're talking about future of money, we can't move away from the fact that Bitcoin is there. And there is a strong view amongst people that something like that should become the future. Not these fiat currencies, whether it's a US dollar. Today, everything is being benchmarked to US dollar. Tomorrow, can it be something else? Can it be a Bitcoin? Can it be something else? So if you talk about future of money, what thought comes to my mind is not the other stuff, but is it going to be Bitcoin? Is it going to be something similar to Bitcoin? That's my thought, Manoj.
Right. Thank you. Gagan?
Nothing much is left to add. I personally feel that there should be single currency globally in some way. We don't have to handle so much of currency exchange. Otherwise, Bitcoin or any of the encrypted way of money. I have not used physical money since 2-3 years. So I think already we are in a position where we have already seen money without the physical cash. So that way, we're already moving ahead.
Right. So already money is changing. The properties of money are changing. And since time is up, and on that note, I'd like to close the session here and close this discussion part of the conference and then move on further. Thank you so much to all my panelists. Thank you so much to all of you for being present here.